How are you today? We're going to get started with our charts. We're going to go over how to identify support and resistance. You can think of support as the ground you're standing on, and you can think of resistance as the ceiling above your head. When prices are standing on the ground, it is being supported. When prices are at the ceiling, it is being resisted. Now, it can break support and go down, just like breaking the ground to make progress. And it can break the roof and go up, just like going up to make progress as well. Stocks go down for many reasons. And stocks go up for many reasons. But your goal is to identify which direction it's going to go in. And you can do, and in doing so, you'll know when to enter the market and when to exit the market. You want to buy low and sell high. So if you look at this chart that we're on, VTRX, you'll see that there are levels where prices are being supported. For instance, the support is where the red line stops. The resistance is where the green line stops. The green can't go up from here. The red can't go down from here. So what we try to do is look for the most common area where prices will be supported and resist. So over here you can see that the price is being supported at 22.35 and it resisted 22.36 for many trades. These are a lot of different trading transactions that happen here between that time. Almost 10 minutes. So you know that this is a significant number, resisting at 22.36. This is a significant number, resisting at 22.35. Now you can see at this time it decided to break that resistance and go up higher. And then the sellers didn't want it to go this high, so they sold off and brought it all the way back down to 22.35. Then they brought it all the way down to 22.34. Then they brought it all the way down to 22.33. And the buyer says, no, that's enough. The buyers decided to push it all the way back up here, all the way back up here, and all the way back up here, 22.37, and all the way to 22.40. And then the seller says, no, that's enough. Let's sell some of this stock. So they sold all, the sellers sold all the way down here. Now, in looking at these charts, you want to wait. If you look at where it was being supported, for almost 10 minutes it was being supported here. Then it made a move to go up. You don't want to jump in when it first moves. You want to wait. In this case, you'd wait about 6 minutes, and then you'd see that it fell all the way down here. You could have waited and waited till it got to a lower low. Now this is a lower low. And once you see in this time frame it made that move again, now it's time to get in. Start to go up from a lower low, coming back from under the ground, back up above ground, and then all the way to the roof. So you want to get in right when it changes its mind and the buyers are buying up and it's coming back above ground. This is your ground, this is your roof. You see it went down a whole set here. So even if you had bought here and it went back to here, you could have sold here and made a profit because you've bought low and you've sold high. But if you had also been patient for a couple of minutes, you'll see that it'll go up and up and up. And as soon as it gets there, you want to sell. Now, how you know when you're going to sell? Nobody ever knows when it's going to turn. No one person, no one computer, no one knows. But what you can do to protect yourself is set a trailing stop order, which means when you buy here, you'll set a trailing stop. If you say I'm buying at $22.33 per share, and if it goes up, I want to sell. I want it to be trailed, and I want it to be sold if it comes back down at $22.39. Now, when you're setting your trailing stop order, you don't want to set it too close. For instance, if you're buying at $22.33, you might want to set it at where you bought it so you don't lose any money. 1% maybe. And as it goes up and it's trailing, if it pulls back 1%, it'll be sold. But the difference between here and there, you'll make a profit. Now look all the way, look, it's way down here at 22.30. This is good time to get in. You know, it's at a lower low, way lower than where it was before, and it could go back there, or at least it could go back to where it shows the most strength, which is here at 22.35. So yeah, it would be a good time to get in right there. Now, another thing to consider is when you're buying into stocks, you want to really look at the trend that it's been having since the company started. If you look at this is a yearly chart. So for the last 4 years, it's been going higher and higher and higher and higher. So it's going up every year. It's going up. Now we look at the quarterly, every 3 months. You know, when it started, it was down here, and it went up, and it kept that price. It would go down the following year, but it will come back up. To go down, but it will come back up. And the next year it went down, and it came back up. Now these are the beginning stages of a company where they're having a hard time passing a certain point. And when people realize that, they say, wait a second, I'm not making any money, so I'm going to sell and go somewhere else. But then, during the year, more people get back in because people sold and it came low. So now you get back in. You get back in and it goes up. And then people start to say, wait a second, this could be a good company. Let's stay in it. And they stayed in and more people bought and it went up. Now in this year of 2020, of course, that was a COVID year. There were some major issues and a lot of companies suffered. So we're not going to take this year or two seriously. Then we go to the first quarter of 2020. And the second quarter of 2020. And it started to go back up again. Then the third quarter of 2020 even went higher. And the fourth quarter of 2020 even went higher. Then now 2021, the first quarter, January, February, March, went up again. And now it's still going up really high. The volume is a little bit low because this period is not over yet. If you look at the preceding volumes, you'll see that it kept at a certain volume, over 100,000. And it even went higher, 277,000. I mean million. Over here, this quarter is not finished yet, but we're already up 92 million. So it's on track to do with what it normally does. Now we're looking at the monthly. So if you look at the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 months. It's over a year. The last 13 months consistently went up. Consistently went up. We had a little pullback here. Maybe it was some bad news. People sold because they panic about something. But then they felt secure again and they pushed the price back up. So you know we're looking at a company that's showing a good track record of growing. Now let's look at the weekly chart. Now you can see, as you can see on the monthly, you see where it pulled back. You can see that in the weekly it will do the same. There are times when people will sell, and it's good because when they sell, they give us an opportunity to buy at a lower price. For instance, we'd buy here at 12.01, and then no more than a month later, we can sell here at 17.09. From $12 to $17. 1 month later. 1 month later, you can increase almost 80%. Almost 70% in 1 month. Over here, it came down and then it went back up. Came down to $16, and it went all the way up to $19. So almost 30%. So you can see how you can make money just by finding a chart that is trending upwards. Finding a company that's growing. And how do you know it's growing? Well, we go back to the year. You look at the year. See? Stocks going up year after year. You look at the quarterly. Stocks going up quarterly after quarterly. You look at the month. Amazing. The last year and 1 month, it's gone up from $9 to $22. 100% in 1 year. So for every dollar you put in, you get $2 and a couple cents. Amazing. On the weekly, same thing. You have, look at that. Up, 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 all the way. Look at that line. Started all the way down here, and we went all the way up here. But this period, this is from 420 all the way to 511. Almost 30 days. Look at that. From $8 to $22 in 30 days. This company is growing. You even go further back. You can see over here, they went down. I don't know, could have been because of COVID restrictions and COVID rules. But then they recovered in April. And they went all the way up here. And the daily, you can see they've been growing. Day by day, it would go up. A couple of days, pull back. Because people buy and people sell. That's the way of the world. They go up, they buy, they keep buying, they buying, they buying, they buying. It increase, and then it pull back. What a wonderful thing! All these pullbacks is the opportunity for you to make money. All of these pullbacks. Look at this. Beautiful. Pull back, buy, go up. Pull back, buy, go up. You can buy here, sell here. Buy here, sell here. There's a little consolidation here. Consolidation, and it went down to 18. And then a few days later, we're up to 20. So what do you think is going to happen here? It's going to continue going up. It's going to pull back also. Sometimes you'll have a big pullback. And sometimes you have a long stretch of wonderful days of it just going up and up and up. Higher highs, higher lows. Could it pull back like this again? Sure could. Sure could. And this from February 13 all the way to March 19th, almost a whole month, it was pulling back. I don't know what happened in that month, but somehow they got over it and the company started showing good results. And over here you can see where we can go, keep going back and back and back, and we can see where resistance and support were maintained. This is a significant number because of the amount of time this was a support. A lot of red lines stop here. And then a lot of green lines stop here. So this was also resistance. The support, where you're standing, resistance, where you're ceiling, you can't go any further. So these are the hiccups in between those major numbers. See, we have here another major resistance support. So you can see these numbers, 21, 22, 41. 22, 42. You can also see that when you break the support of that, just be patient and wait. This is by the minute chart. Only minutes. These are all not even minutes, seconds. By the seconds. And this is about, let's see how many seconds this is. This is from 22 to 45. So there's 25 seconds worth of trading. 25 seconds. And then here we have another 25 seconds. And that's 50 seconds. This is almost just a minute. So if you'd waited just a minute and a couple seconds, you could buy here and hold and hold and hold. And look what happens. It goes up all the way from here. From 22.27, 22.35, 22.39. And then it started to pull back again to that major support, 22.36. You know, that's the behavior of the stock market. You buy, you sell. You can't buy and sell every 30 seconds unless you have over $25,000 in your account. It's a rule that they set because they're afraid that people will take their savings and spend it all off. So they make a rule that you have to have more than $25,000 because you know why? If your savings is $25,000, you're not going to put it all in the market. You're going to probably wait till your savings account is over $25,000. Then maybe you'll take out $5,000 if you have $30,000 put in the stock market. They want you to keep at least that much in your account in America because they think that's safe for you. I don't know why. Because the majority of people don't even have $5,000 in their account. As you can see, we can see major support and resisting lines here. All of these step, step, step. These are just quick movements, and then you have it trying to hold steady for a little while. Then we have step, step, step down, and it holds for a moment. Then it steps up. We're looking for all of these trends. We're looking at all of these trends. Where you can see how these lines you can see how we have major, look at this, it's all the way across here. Could have bought here, sold here, waited, bought here, sold here. Yep. Resistance and support. Resist from going higher, support from going lower. So you have a habit of going from this point all the way high and coming right back to it. Market practically repeats itself. Bought here at 9:45, sold here at 10. 15 minutes. 15 minutes, 20 cents on the dollar. It was here, it went up 22.86 and then sold all the way up to 22.23. So repeat, you know it's going to repeat itself. It's going to go all the way back to 22.86. See, 22.75. It likes to be up there too. 22.75. So if you buy at 22, 26, 22.69, 22.23, all the way to 22.25, 22.75. So yeah. So the first thing you want to do, as I said before, you want to look at the charts. Make sure it's trending up on the year, it's trending up on the quarter, it's trending up on the month, it's going up on the week. It's going up, week after week, day after day. It's going up. How can you lose your money? You just have to buy, get in when you draw your line, get in when it touches the line, and just wait for it to go up in a week, a month, then sell. That's it. And you find 10 charts like that and just do it over and over again. I mean, we're talking about making that's $7 here. In 1 month, from $7 to $23 in 1 month. You're doubling your money. Can it go from $23 to $50 in another month? Yes, it could. Why not? Can it go down? Yes, it could too. Could go down as well. But if you time it right and you look at, if you look at where it would, if where you get in, you can realize that there's a pattern. If you look at it right here, 11:11, and within the space of 12:8, it started to go down. So you were looking at an average of uh, 11, 30, 20, almost 30 days. So if you even cut your days short, let's say you do 20 days, you buy low and 20 days later you sell. Wait again for it to come low, at least another 20 days. You made a little hiccup here, but still it went up. And that's another 20 days right there. 13th to the 10th. So almost a little bit over 20 days. So every 20 days, you wait again 20 days. Let's see. 12, 25, 26, almost 20 days. And you buy again and wait 20 days. Let's look at this. Go all the way up. So this is an average of 20 days. I'm not saying for you to do 20 days. You can calculate on the chart that you're looking at. And how do you do it? I'm going to tell you again. Find a stock, check the year. You want to look at the year, it's uptrending. You want to look at the quarters, it's uptrending. You want to look at the month, it's uptrending. There are a lot of companies out there like this. Not only one, a lot. A lot of companies out there that's uptrending. It's all uptrending. And if you want to buy, by the week, if you want to check it by the week, even better. You check it by the week. You'd see, okay, well, week 1, week 2, week 3, week 4, week 5. You can buy by the week. You buy here, you draw your line, you buy when you see it start to go up. And you just wait. You can sell 2 weeks, 3 weeks later, make a profit and get out. Then you can wait for it to pull back. When you see the red comes in and it hits the line, you buy again. And then it goes up. If you see red, 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 and then you see a green 1 week later, more than likely the trend is turning back from going down to going up. So you want to buy again as soon as possible. And you wait. Patience is the key. Then you check it the following day, because every day it's going up and up and up. This is 1 week, 2 week, 3 week, 4 week, 5 weeks. Look at this big jump right here. In 5 weeks. You buy here, 12, you sell here at 17. Just in 5 weeks, a month. Average a month in all of these things going up. So average out to a month. Then it goes down, and then goes down for a month, and then it went back up. Start going back up. So now you know that this is somehow it's going to be coming down soon, back to our line here. It's going to be coming down under our line here with some red. You want to wait for that. Then you go get in. You know, you want to get in. You know, one good indication is when you see one green line of volume here and the other one is higher, definitely a good time to get in. You want to get in when the green lines are low to high. Get in when the green lines are low to high. Then you can see that the volume is dropping and dropping and dropping, and then it spiked back up, but then it dropped. And the selling here, then it kept its price here. People kept buying through this time. Right here, you look at the volume, look at the height. The average volume over here is 11 million. So once you see that green line is in, we have 11 million shares traded in 1 week. We're good to go. This platform that I'm using is Webull. You can start with Webull, sign up with them, $100, and you get this for free. It's on your phone. It's on your laptop. You just sign in. As you can see here, I have just a regular chart. I have a MA of 4. Just that blue line that's just following the trend. You know, you look at the line, it could tell you which direction the market's going in. See the line turn here, it's going up. It follows the stock. You know, and it's just a basic setting. We have a chart open. We have a watch list over here, which you can customize. You just press these upper buttons in the corner. You can put your watch list. You can edit your watch list here, and you can add. This is how you would add. You add a chart. If you want to add a chart up here, you can see I have 1, 2, 3, 4 charts up there. Or you can add a widget. You want to add the order entry. You want to add quotes. See, I got a quote over here that I added. You can add watch list, a quote. You can add brokers, alert messages. You can add a whole bunch of stuff. But you just want to keep it simple. You look for the trend. You look for the trend by the year. Companies going up. You look for the trend by the quarter. Companies going up. You look for the trend by the month. You can't lose. You're going to make your money. You just have to be patient. Get in. Draw a trend line. You just press the little pencil up here. Select you want to go on the angle. Right here, you can select an angle, trend line, horizontal line, vertical lines, whatever. Ray. Simple. You just draw your trend line. You look at it week after week, day after day. It's going up. If you're going to buy weekly, if you're going to buy and leave for a week, then you ain't got to worry about it. Just buy when it hits the line. You draw your trend line. Wherever it is, wherever the stock is right now, you go from the bottom over here to the bottom of the top one. And then you'll see it goes up and it pulls back. Right here, it's pulling back. It's just pulling back a little. Then it started to go up again. And it went all the way up. It tried to pull back here. You can see the long red line underneath. That's sellers selling down and buyers buying all the way back up to the bottom of the red. So the longer the bottom is, that's another indicator. The longer the bottom, it tells you buyers are in control. Buyers are saying, no way, let's push it back up. So if you have, this is how you know it's going to turn. How do you know it's going to turn? You have a long red line, and then it goes to the next candle, and guess what happens? It's higher. You have a lower low and a higher low, which means buyers are pushing the price back up. It's a higher low. Then you have a indecision right here. Both top and bottom is the same size. So you wait for the next candle. The next candle is green. Jump in. If it's green, jump in. Jump right on in. And then you can set your price target. If you put in $100, you want to make 110, you sell at 110. If people get greedy sometimes, and that's not even good. They get greedy and they want to wait forever, as if the chart's never going to come back down. The price never. Yes, the price will come back down. I mean, if you're going to hold for 20 years, that's fine. If you're going to hold for a year, that's fine too. But if you're buying and selling weekly or monthly, then 1 week go by, if you make 10%, take your money out. If you look at it again and you want to go back in, put it back in. Get another 10%. That's where your money increase. 10% on $100 is 110. 10% on $110, it's 121. That's an extra $11. And 10% on 121, it's 100 and I can't know off the top of my head, but you're somewhere over 130. That's right. We don't know the exact number, but I know it's going up. That's what we want, for it to go up. Up and up and up. Don't even need to be smart. Just need to just realize there's a pattern. It's a pattern of it going up. And there are lots of companies like this out there. Lots of them. This is a daily chart, so we got to pull it back to see on the days how it goes up, and then it pulls back here a little bit with a red. Right here, it pulls back, and it goes all the way up for many days. Then it comes down for a little bit. Then it goes up. Then it comes over. So between this point, if you buy right here and get out over here, you're looking at $13. $3 on every $10 that you put in. Almost $4. $15. 10, 20, all the way up to 15. Wow. That's pretty good. And how do you find these charts? Well, that we'll discuss in another video. All right. Thank you all for watching, and please subscribe and press that like button. I have lots more to give you. And whatever you guys want to learn, you can please write it in the comments, and I'll try to respond as best I can. Thank you. Have a good day.